depending on what part of the country you are in. My name is Bill Corcoran, and I will be one of your presenters today as we do Marquet and Bill Unplugged, which is a little get-together we have every Tuesday, a free online class for you guys to participate in, for us to spend a little bit of time talking to you guys and getting, hang on a second, getting a chance to talk about the markets in the middle of the day when things are tending to slow down. All right, Bill says he can hear me. That's good. Mike, how are you, sir? Good to see you. All right, guys, so let's go ahead and knock out the disclaimer so that you guys are aware that in this presentation, neither Marquet or I are registered broker-dealers or investment advisors. That is not our job. We are teachers and coaches. We may mention from time to time that we consider certain securities or positions to be good candidates for the type of strategies we're discussing or illustrating. Just because we consider the securities or positions appropriate to discussion or illustration does not mean we're telling you to trade those strategies or securities. Keep in mind, we're not providing you with recommendations or personalized advice about your trading activities, and the information we are providing is not tailored to any particular individual. Any mention of a security is not a recommendation to buy, sell, or hold that security or any other security or a suggestion that is suitable for a specific person. Keep in mind that all trading involves risk, and that's always the situation, regardless of whether we are discussing strategies intended to limit risk. Neither Marquet or I are under any trading restrictions, and therefore we may have or initiate a position at any time without having to tell you about it. Judy, hang on, that might change. Judy saying, DC Joe says he's in Chicago and already has had his first of 2 runs. What are you doing in Chicago? Let's see, okay, so I'll see what we can do, and I'll pass that on, right? So, I mean, that should hold some weight there that you guys won't go if Marquet and I don't go. Joseph, how are you, sir? Thank you very much. I appreciate that. Joseph says, how are you doing? I'm doing well, and I appreciate the kind words. All right, so what do you guys want to talk about? I was going to talk about Amazon. I was going to try to get you guys all excited about buying put options on, on Tesla. All right, because here's Tesla has been rallying all day, right? And then you get this candlestick, and it's like clearly that's got to be the time to buy put options, right? Right in here. You see that right there? It's like, oh, it's time to buy some put options. And I was hoping that was going to be the case, and then they went and did this, and now you guys can see. The lesson, I guess, that I want to teach today is a lesson on momentum and the importance of momentum in a trend. We saw it yesterday and the day before with a phenomenal trade setup on Priceline. Judah says, did you smoke Priceline yesterday and today? Yesterday, yes. Okay. Today, spreads were pretty wide this morning. Tough to get into a new trade. Phil fixed your problem. Okay, very good, Sally. I'm glad to hear that. So we did get you taken care of. Drea, how are you? Good to see you in here. Drea says, just finished reading Richest Man in Babylon again. After the Super Summit, I was in the right state of mind. Now I'm back to work and back to the normal hustle around my coworkers who are quite negative. I need to get to another event. Yeah, you do. Mindset is everything, right? That's what's going to determine your success. Who you hang out with matters. There are things that you can do to limit your exposure to the negativity, and negativity is always balanced out with positivity. So I would encourage you to, on your way to work and way back from work, right? Anybody ever have a job where you had to drive through traffic and you're sitting in traffic just all angry and frustrated? Very good friend of mine converted that time to his learning time, and he started using DVDs of Brian Tracy, Tony Robbins, and others to change his mindset. So the 2 hours that he was stuck per day in traffic actually became a mindset reset for him because he had those DVDs in. All right, so some good stuff you can do there. Let's see, Mike says, reading and making notes on trading in the zone. Also listen to Mindset on DVDs while I shave in the morning. I love that. That's awesome. So, guys, here's what I'm going to tell you. Your success is based on your choices, right? You can choose to be successful. You can choose not to be. I've heard it put this way, success is a choice, but so is poverty. Another way to put it is that we are all self-made, right? Because you've all heard that term, right? Anybody ever heard that term, a self-made millionaire? Well, we're all self-made. It's just that the millionaires admit it. Think about that for a minute. We are all self-made, but the millionaires admit it. I'm going to give you a minute to think on it. That's pretty powerful stuff. I don't care who you are. So I want to talk a little bit about momentum. Jack Canfield's Success Principles. Great book. I've got an autographed copy of it. Met Jack at a couple of different events. One, he was speaking to several thousand people, and I had an opportunity to be there. Met Jack. I met, let's see, who else did I meet there? Bill O'Reilly. Met Zig Ziglar, right? Met him in person. Tom Hopkins, another well-known speaker. Met all those guys at a big event about 6 years ago, 2010. And at that event, I said something to a friend of mine who was there. In fact, some of you have met Dean. Some of you went to his class, and I turned to Dean and I said, I'm going to be up on that stage. And I will. That's all I'm going to say for now. All right. Let's see here. How do you switch back and forth from simulated real trades? You got to log out, Sally. You got to log out and log back in. Okay. Julie says, I believe you will. Well, Julie, you are right. I will. I'm just not ready to tell you about it yet. Final processes here, right? Thanks, guys. I'm going to do trading in the zone on CD, en route to work. Just want to quit my job and trade full time. That's when I'm happiest, when I'm learning and trading. Good, Drea. Do it, make it happen, right? But understand it's a process, right? Much like a reversal is a process, a reversal of your personal trend can be a process, and so that's something that we have to learn to master. We have to learn to overcome. Let me talk a little bit about momentum here while we've got a chance, and a lot of you talked about the Priceline trade yesterday and today. Priceline just blew up yesterday. Huge move, and it's a great illustration of what Marquet teaches, what I try to teach you guys, and the lesson is this, right? Yesterday, Priceline blows up, takes off, goes up $48 in one day. All right. Now we took a position on it kind of midday, and it was almost off the cuff. In fact, I took the position to teach an order entry process in Tradestation, and had some folks who were like, okay, well, I need to know how to get in a trade, so we got into one just to get into one, and ended up making like I think it was $18,000 or $20,000 profit on that paper trade on Priceline, and it wasn't the best entry, but it was one of the best lessons. And a couple lessons here. First off, does anybody know why Priceline moved as much as it did yesterday? Vasu, thank you. That's very kind of you, and you are correct. Big stage, big speakers, not telling you where or who. People were buying momentum. Hey, Vasu, you might know. Anybody else know why? What was it that caused Priceline to run up $48? Hey, Elizabeth, how are you doing? Good to see you. Anybody else know? There was news, right? They got an interim CEO. The last guy got in trouble. I guess he had an inappropriate relationship with somebody in the company. I don't even know what it was. Who knows? Maybe he could run for office now. So there's news. There's news, right? And yes, Donald, we do, and we're getting ready to do even more. So make sure when you go over there, you let them know you are a BetterTrades customer, and you're going to get some special deals and offers that nobody else gets because you're coming in through BetterTrades, including our templates. Okay. All right. So news moved the stock, guys. It moved $48. News actually doesn't move the stock, and a lot of you guys that have been around for a while are answering with the correct answer, and the answer is there was more aggressive buying than there was selling. Straight up, simply put, buyers were more aggressive than sellers. The stock rallied $48. My point here, though, is, guys, how long had the stock been moving up before the news broke yesterday? The stock had been moving for, well, let's just count them out, right? We got, let's see, yesterday, day before that, and the day before that. So for 3 days before the news broke, the stock had started moving up. And the day before the news broke, the stock moves up like 15 bucks. Well, what in the world is going on? Why is the stock moving up before the news? Christine, that is awesome. Christine says, I got in on Friday, up $55,000 on a paper trade. Anticipation Bill says, momentum, insider information, all true. Guys, here's the lesson of the day for you guys. This move in Priceline is exactly why I tell you guys to stop trading from a position of fear. Those of you that are day trading only, you're like, oh, I'm only going to get in for a day trade because I don't want the stock to go in my favor, right? I mean, that's what you're saying when you say you don't want to day trade. You want to day trade because you're worried about what's going to happen overnight. If you learn to read the charts, if you look at what's happening in the charts, what's happening in the charts tells you the direction the stock is most likely to go. If you got in on, you know, this day and you got out that day, well, you made a little bit of money. A little. Okay. You can make some money, but the fact that you got out means that the next day when this happens, right, now you're paying the spreads again. So now you're effectively losing money because you're paying the spread. You're losing $1 to $2 on the Priceline spreads. And then you get out, right? And how many of you guys, when you day trade, you nail it? You get in right at the very, very bottom, and you get out at the right at the very, very top. Is that how that works? No, that's not how that works. You end up getting scared out early. I'll show you how that works in just a minute. Right? And then this happened. Now, this day, I actually did say in the lab, if I'm trading Priceline, it's going to be a day trade only. Why was it going to be a day trade only? We've already been up for 3 days above that 50 moving average, guys, and we know that the stock is likely to move for 3 to 5 days. Well, 3 days is going to be right in that 3 to 5 day range, and now the probability of the stock gapping against us and taking out some of our profit increases. So got in, got out yesterday. This happens today, right, and some opportunities that present themselves again today. But for people who traded it like Christine did and got in, guys, check it out, Tuesday, Monday, Friday gave us an awesome entry for an expiration day trade that could have been rolled into a weekly option. And as Christine says, she's up $55,000 on a paper trade, on a swing trade on Priceline. That is awesome. Well done, Christine. How many of you guys would like to see the day trading entry that we had on Friday that triggered this whole thing? Anybody want to see where a really nice day trading entry occurred that could have been rolled into a swing trade? Absolutely, Christine. I'm very impressed. Mike says, twist my arm. Patty says, way to go, Christine. And Paul says, yes. Elizabeth says, yeah, great job, Christine. Yeehaw. Yeah, absolutely. Well done. Well done. All right. So, guys, one of my favorite trade setups is to look for option trades on expiration day, on Friday. Right, so let's just back up the chart here. And those of you that are like, wait a minute, this looks different than the last time we were together, guys, we've now moved completely over to the Tradestation platform. Tradestation is the Barron's best options trading platform anywhere, and has been for years. And we've decided to move to Tradestation. We had tried to move to Tradestation a couple of years ago, weren't able to, and just had an opportunity literally a couple of weeks ago, got dropped in our laps to be able to move over to Tradestation. And so we took them up on it, and it's been phenomenal. All right, so now you've got a real-world trading platform, right, instead of just a good data feed. And it has been tremendous, the opportunities that this is going to offer to our students. All right, so Friday, this happened. And I mean, it happened at about 12:30 my time, which was 1:30 Eastern Standard Time. Priceline had been going along. They bounced off the 50 moving average. They're kind of going up a little bit, nothing huge. Then you had this Bollinger Band squeeze play in the middle of the day. Well, why do I get excited about option trading on Friday at the middle of the day? Okay, Tom, I'll show you how to do that in just a second. Drea, the templates are ready. In fact, all of these templates that you see down here, they're already available for my students, and we're going to make them available to all of the BetterTrades students. We're just working on some additional templates that are coming in. Claude says, hi, Delta. Diane says, because there was a breakout. Less active during the middle of the day, David says. Yes, true, all true. Can you trade off the charts? Yes, I can. I'll show you how we do that in just a little bit. Kim, there it is. Thank you so much, Kim. Kim says, cheap options. Hello. I don't know about y'all, but I like options on Priceline when they're cheap, not expensive. Right? Does that make sense? On expiration day, guys, those options have lost almost all of their time value. So what you're left with in the out-of-the-money series is a very low-cost time value option. In the money, you are left with an option that is almost all intrinsic value. Very powerful strategy to buy an option that is $1 or $2 in the money and pay $1 or $2 for it, because you're effectively buying the stock at that point. So stocks trading about 1290, it breaks down a little bit, fails to break below the lower Bollinger Band, crosses the moving averages, volume starts picking up, and we get this Bollinger Band breakout of a squeeze play right here. And I'm just going to kind of slide this forward, and this is something that I encourage you guys to do in your own world. Kind of practice this stuff. You get a rising 3 pattern, pull back to the 10 moving average with a bounce, continues to rally higher. And so on Friday, you had this activity go on right here that took you, now guys, this is on a Friday. This is expiration day. Your breakout occurs around just shy of 1290. I'm sorry, just shy of 1295. Call it 1292. Took you all the way up to 1300. Right? That's an $8 move. Guys, if you're buying an option that is 1 or 2 strikes in the money, it's almost all intrinsic value, you're catching almost all $8 of that move. And as exciting as that is, and it should be, because think about it, on one contract, that's $700 or $800 of profit. On 10 contracts, $7,000 or $8,000 of profit, and so forth. So nice little breakout here. If you go back to the daily chart and you look at the daily chart and you go, well, you know what, Priceline last week on Friday, which was, here's Tuesday, Monday, Friday, right in here, if you look at where that 1290 area occurred, guys, it occurred on a breakout of the previous day's high price. Right there. Now, looking at that and looking at the chart at the end of the day, you might say to yourself, you know what? This is really day 1 above the 50 moving average, day 2 total. This could go on for days. Could you take that $8,000 of profit on 10 contracts, $800 on one contract, take that profit and invest that profit in an option that expired this week at a higher strike price, let's say the 1300 strike price? Could you do that? You're now playing on the house's money. So the breakout that first occurred on Friday allows you to make some money, reduce your risk, reinvest that in a 1300 strike price, Guys, the stock is trading today right now at $13.65. You would be $65 in the money today. Would that get any of you excited? $65 in the money? One contract, guys, that's $6,500. 10 would be 65,000, and you heard it right here in class. You got somebody right here in class with you who did exactly that. And I don't know, did you do the rollout, Christine, or did you just stay with it? Both of them are to be commended, because what most people do is they fail to let the winners run. Right? Fail to let the winners run. And that's where folks get themselves into trouble. This is something that I focus on a lot in the morning lab. Try to get you guys focused on letting the winners run. Get your risk as close to zero as you can, as quickly as you can. And then let the winner run. So let's see here. Tell me about it. I had an alert on Friday and didn't get in when it went off. Wow. Yeah, I hate it when that happens. Been there, Jose. Here's the good news, guys. Priceline will move like this again, I assure you. Not going to be a problem. Now $48 in one day is a little bit unusual even for Priceline, but this stock is a monster. It's a mover. So at this point, what am I doing? I'm waiting for a potential pullback. We'll see if we get a nice bounce at a moving average and look for a new entry. Okay. Well done. So Christine just stayed with the position. Bought the options last week at 2:08 p.m. and just stayed with them. I love it. As long as the chart tells you to stay with it, you stay with it, and then what do? You look for a technical exit. Profit is not a reason to exit your trades. You need reasons to exit the trades. These are things that we're going to be going over next week in the Chicago 5-day Traders Intensive that Marquet and I are doing right on the floor of the CBOE. We're in a room overlooking the floor. We're going to be doing a floor tour, taking you guys down there so you can see all this stuff that's going on down there. And you're going to be trading with us for 5 straight days, guys. The learning and growth that goes on in that event is absolutely stunning. Great opportunity. So, this is great. We can look at Priceline, and unless you're Christine, you're like, well, crap, I missed out on all that. What do I do now, right? Does this look at all similar to what we just saw on Priceline? Guys, first thing this morning, this morning I had a technical problem and had to log out of the lab, but there was a really beautiful entry right here on Tesla around $222 a share, a little bit above that, when it crossed above the 50 moving average. Stock crossed above the 50 moving average actually about 8 minutes in, right in here. Crossed above the 200 moving average this morning on a gap up, right? The 200 was right in here. Gapped up, second candlestick, 6-7 minutes in. You're across the 50 moving average and going higher. Nice entry here into Tesla. If you missed that, it's okay. The stock retraced, came right to the 10 moving average, started to rally, gave another entry there. Now retracing, going into the middle of the day. Going to wait to see what this one does going into the close of the day. But again, this is day one of a move that is above the 50 moving average, above the 200 moving average. It's only been moving up for 2 days. And as Marquet says, if you can get in on day one or day two or candlestick one or candlestick two of the move, then that's the best place for you to be. Don't get in there after it's been up for 4 or 5 days. So you look at a price line, you go, wow, man, look at this. This is great. I'm going to get in now. You're going to get your head cut off, all right? Because when this thing retraces, it retraces $10, $15, $20. Don't get in now. It's been up for 5 straight freaking days. Give it a chance to retrace. You look at something like a Tesla and go, whoa, hang on a minute. Now this one is above its moving averages, and it's day 1 or 2 of the move. Does that make sense to everybody? Drea, again, it's so much of it is the mindset stuff. I love what Drea says here. Take me on as your special honor student. You're my Mr. Miyagi. Anybody remember Karate Kid? All right. I just need to shadow you for 6 months. I have a good friend who he actually did that. Followed a guy around, got an offer from this guy to be his mentee, and moved in with the guy and everything. Cleaned floors and all this stuff, and learned stuff while he was doing it. And, kind of an interesting story. Christine says, I got in on, Christine, you're just killing it here. I got in on the third candle of Tesla this morning. I'm up 29.50 so far on a paper trade. I'm getting better at my entries. Very excited. Guys, that right there, for those of you that are frustrated or think it's not going to work for you, that right there is proof that it can, right? This is all about you. You got to make this work. David says, I would assume a swing trade on Tesla. All right? So, David, tell me why you would assume that. Give me your argument on why this would be a swing trade and not a day trade. Very nice, Claude. So Claude doing some low-cost trades on Priceline, made $1,016 today with only a $478 cost. Well done. Okay, David says because stocks tend to move in the direction of the trend for 3 to 5 days, right? 3 to 5 days. And then they retrace for 1 to 3. And now I'm getting ready to turn this over to Marquet here in just a second. And when I do, I'm going to sit in class here for a little bit because y'all rat me out and you're like, oh, Bill says that you should do this. And no, Bill simply is a product of the product. All Bill does is repeat what he's been taught. And most of what Bill's been taught, he's been taught by Marquet, right? So when I talk about these swing trades, trend trades, day trades, guys, understand that I am a product of the product. If you will listen to this stuff, if you will learn it, if you'll focus on it, if you'll get plugged in, if you'll show up to the labs and the trader talks, if you'll put in the time, if you'll make the big investments. One of the most important things about being successful, guys, is that you have to exist outside of your comfort zone. My good friend Dean, on the one hand, I kind of feel bad for him because he's like, since I hooked up with you, I have lost sight of my comfort zone. I don't even know where it went, right? You have to get out of that comfort zone. You have to spend more time than most people think is reasonable. You have to invest more money than you will ever be comfortable doing in order to be successful. Those people who are going to join us at the 5-day in Chicago are those kinds of people. It's a stretch to make that kind of an investment, but they know that the return on that investment will be there, right? You have to leap, and then the net will appear. I had a great quote in the lab this morning that says that, once you are committed, then the path to success appears. It's not until after you commit, truly commit, that you get that path to success. And a lot of people say, well, you know what, I don't know if I want to make an investment in X. Well, if you don't want to make the investment, that's fine. Nobody's beating you up here. Nobody is dragging you kicking and screaming to your own success. But by the same token, we're not hiding it from you. Marquet and I make ourselves extremely available to students who are interested in becoming successful traders, and we're going to be doing more of that in the very near future, making ourselves available to students that are serious about wanting to take their success to the next level. And by serious, I mean willing to put in the time, effort, energy, and money to learn this stuff. Judah says, if you and Marquet come to Chicago, then we can have a birthday party. Mine's kind of that same week, too. I'm just saying. All right? Just so you know. All right, let's see here. Share the calendar, cash flow presentation. I thought that went out. Let me follow up on that. Yes, it is true, Judy. Okay, so a couple questions on eSignal versus Tradestation, and then I'll go and turn you guys over to Marquet. What's the deal with that? We got onto Tradestation and have eSignal just paid for another month's subscription. Okay, so if you're on the monthly, run your monthly out and then do the switch over, right, Bill? And you can come over. We're going to have a price for you guys on that. Guys, what you're getting with Tradestation is you're getting an integrated platform where you have your trading for equities, options, futures. You can even trade treasuries on here if you know how to do that. I don't know what treasuries are all about there. I know they move opposite of each other and they're kind of backwards, and Rick Santelli says stuff on CNBC all the time about them. I don't understand them. But you could trade them here. You can trade all of those things, and it's integrated. So in other words, when I enter let's just say, for example, I look at Tesla and I'm like, man, I like Tesla. I think it's going to bounce here. This might be a place for me to get in. Now, understand I'm doing this for teaching purposes only, just to show you how to enter a trade. When I go in, if this is a funded account, and I go in and I buy 21 contracts right here, and I place this order, I am going to get that order filled that fast. That's it. There's no integration issue between this and another broker. Tradestation is the broker, so it is truly a trading platform where I'm doing my trading, but I'm also getting great data. Options for Tradestation folks are $1 per contract for BetterTrades folks, and you get a 20-cent per contract discount, tuition reimbursement discount. So if you've invested $10,000 in your education with BetterTrades, Tradestation is going to discount your options 20 cents per contract against that $10,000 that you've invested. So an awesome opportunity for you guys there. We are currently building a set of BetterTrades scans. There's one right here. I was showing the folks in lab this morning. Okay, I am putting together a set of scans for my own stuff. That'll be a different package. Marquet's putting together a set of scans that you guys, many of you have been using in here in Extreme Charts. Now it's going to be brought into a live real-time platform here at Tradestation, and you guys will have access to that, those of you that subscribe to that. But those of you that subscribe to Tradestation, we're going to build out a separate set of scans here. And just as an example, this is a scan I ran this morning that's going to be included with your Tradestation only if you're a BetterTrades student. Included with it, for example, bearish engulfing. So here's a list of stuff. Of all the 30,000 stocks out there, here are the ones that created bearish engulfing candlesticks one day ago. Okay, you can see it right here. AEO had a bearish engulfing candlestick yesterday. Is that worth paying attention to first thing this morning? What do y'all think? Yeah, it is. Because oftentimes stocks will break down out of that bearish engulfing. And so I'm just going down this list, this scan that I set up. Right, there's one right there. Bearish engulfing candlestick. This morning it gaps down below the 10 moving average. GDDY, don't even, oh, GoDaddy. Okay, I guess I need to go buy some more domains over there. So this is the kind of stuff, guys, that's going to be and continually improving. The templates right here. Here's my template for the lab charts, the 5-minute, all of the watch lists that are included here in there. All of this stuff together, guys. All of these different setups, all this stuff that I've got already set up, and we're adding more. I know Marquet and Jed have been working hard to get their templates, get Marquet's templates in and set up. So it's all there, guys, and it's we're going to teach you how to use it. Looks very similar to eSignal. The difference is you get better executions. That would be not just better, you get them. So those are going to be some of the. Hopefully that answers some of your questions about it. Let me see here. Can the technical analysis groups that you've set up be downloaded as well? I believe they can, Scott. Let me check. Will Marquet's templates translate to Tradestation? Mike, they will if they're programmed in, right, which is what they're working on right now. Let's see. Who do we call to get that set up, the Tradestation offer? Just give us a call, Dre. Call our customer service. We'll get you taken care of. Thank you, Judy. That's an offer I can't refuse. All right. So, guys, hopefully that answers your questions. How do you change a symbol on a chart? Watch, check this out. A couple different ways that I can change a symbol. One, when you guys download the templates that I've got, they're already linked, right? So your watch list, those of you that have Marquet's Market Insight or her Trader Talk, I've actually got a watch list set up where you can type in the list that she comes up with when she's discussing that, and I've got them linked, so check that. Anytime I click on one of these, it's going to change the daily and the 5-minute chart. And if you're like, well, yeah, but I want to look at Lockheed Martin. Well, just click on either one of the two charts. You just have to click on it, right? So now it's dark blue, and just start typing, LMT, right? There it is. Lockheed Martin changes that quick. Just call our 1-800 number, Bill. Bill says, do I talk to sales, technical support, or who? And the answer is that it's all pretty much the same people. Okay. Do I know a portfolio margin is available at Tradestation? You know what, Mike? Last time I checked it was, but let me confirm that. Let me confirm that. All right, guys. So let me do this. I'm going long here, and I've actually got a lunch meeting and a phone call after that that I've got to get to. So let me see if Marquet's ready to go, and I will bring her on board here. So, guys, I appreciate the opportunity to hang out with you guys. Going to turn it over to Marquet Latimer.
Hello, everyone. How are you guys? All right, so hope you are all doing well, having a nice, fun trading day. Let me see here. Pull up the question so I can see what you're asking. Cool. All right, yes, good morning, everyone. So let's do this. I saw Bill showing you some charts and looking at a variety of things. I figured what we could start with. Oh, I got Facebook. Let's check that out. Bye, Bill. All right, you're doing wonderful, huh? Cool. So Bill and I are running a little bit like crazy this week. I know you guys know, I don't know if he talked about it or not, but we've got our 5-day next week in Chicago. So we're getting everything ready. Super, super excited for that event. I cannot wait. So I know we're going to see a lot of you guys there. So yeah, just get excited. Get ready. It's going to be awesome. Scott has not heard about it. Scott will be there torturing us all. So do come and hang out. I really am so excited. So we got some things planned that you guys are going to love. So anyway, so with that, running and trading and looking at the markets, and then have a chance to pop in here and chat with you guys. So we love it. Facebook has been on my list because it has this slowing pattern. And let me bring in, well, let's see if I could draw a line. Probably not, but I will do my best. If you just got this, definitely not. It's true. Definitely not. So just as you look at Facebook, yeah, this is not even going to be close to straight. But if I draw that, if I draw a little bit of a trend line, you can see the deal with Facebook is they're making lower highs. And every time, it's a little bit weird. Because every time they come down to the 20, they bounce. We see the buyers moving in, but they haven't been able to make it to a new high. This morning, it even gapped. See if you look at on the left with the 5-minute chart, we have this gap up, and then it immediately failed. And actually, if you were trading today off of these patterns, because I'm looking at Facebook as until it breaks out of that triangle, we don't have a real clear sense of direction. You know, it's struggling between support and resistance. That's something that you either stay away from, and if you're an end-of-day trader, it really is a great stock to stay away from. And set it works on that breakout area. You know, now if you're using Tradestation, you've got some great contingent order abilities to trade if it does break out, which is very nice. If it doesn't, then in the meantime, you can day trade it if you want. And for those of you that do a little bit of day trading and look at the intraday charts, there are some neat opportunities here. And you can just even see, you know, just looking at this morning on Facebook, you had a couple. The second candle in on the breakdown, after that first 5-minute candle, that would be one place. Another place that was really nice was after the retracement. And what happened, you're 20 minutes into the market, and Facebook traded right up to a 20 simple moving average here, and then it started to sell off and it started to drop. So what it did, you know, in this area, when it drops from that 20 moving average, that ends up giving us a bearish trading signal. And basically after something like that, you can get in the trade and buy puts there and put your stop right around that 20 simple moving average. And what happens as a day trader, so there are a couple ways to do this. So right here, a couple ways to do this. If you are, yeah, it's just me, I was coughing. Okay, sorry. All right, so I don't want to cough in your ear. So Facebook, where it came up to the 20 moving average, it found resistance at that 20 moving average and it starts to drop. Now, as a day trader, so you go in, you start the trade, and you could use the moving average as your stop. And this is the same case if this was a daily chart and you are swing trading or trend trading, right? You're going to use the 20 moving average as the stop unless things begin to change and look different. So over here, let me back this up. Okay, so check this out. So right in this area, what happened was a little bit different. You see what's going on? So if you had entered a trade on this hit of the 20 moving average and you were using that 20 moving average as the stop, you would still be in the trade as the stock is selling off. But something right here is developing that has a different look to it. I know you guys know what this is. Thank you guys. All right, Teresa, Denise, Mike, you guys are awesome. You start to see this is a developing Bollinger Band bottom. What is happening is volume is getting very light, and as the stock tries to sell off, it cannot push to a new low, and it's also no longer touching that lower Bollinger Band, right? Right in that area, that's a big deal. It starts to look like a Bollinger Band bottom. So knowing that, that's a sign that the stock may bounce. And I don't care if these were daily candles, or in this case, those are 5-minute candles. If the stock may bounce and you have a stop way up here around 118.20, let's say, right where the 20 moving average is on this chart, would you want to keep that as your stop, or would you want to move it down to protect more of that money? Mike says, been waiting on a woman to call me awesome. All right, there you go. Done, Mike. You are awesome. Oh, see, I'll miss you guys. I love hanging out with you. All right, so when you start to see signs that things are bottoming out, why have your stop way up here? Why not do something to protect some of that money? And this is where you could start using, a couple ideas. One, we see the Bollinger bottom. Look for a bullish engulfing candle. Or two, in this case, you see how the 10 moving average is wrapping around, and it seems to be right up at kind of the top of the highs of the last 4 candles. That could be your exit. So something, you take your stop. So you get in these trades, you use the moving average as a stop until something changes. What has changed here is that the stock is starting to look more like it's trying to slow down, like it might bounce. It's looking less bearish right here. All right, so what we could do here is tighten stops down, right? So now, if you have that idea of you're moving your stops downward toward that 10 moving average, well, on this very next candle, you're stopped down. And notice that little slight uptick in volume. So maybe the volume is getting bigger right there. So it makes sense to use that as your exit. So you could be in a trade somewhere in here around that 118, 80 area, and then out over here around, that one at 17.92. So this is just fast day trading on a stock like Facebook. You notice that's not, $10, in case nobody noticed that. It's not a lot of money. Is that surprising? I know it shouldn't be, because if you are day trading Facebook, you're only day trading this consolidation area here within this triangle. And the problem with this is that the longer Facebook stays in this little triangle pattern, the smaller and smaller the intraday movement becomes, by the way. Right? Until it breaks out, we're going to see smaller and smaller movement. It's just the nature of a triangle. As the range gets smaller and smaller as we go forward, move further to the right into that triangle pattern. So it's still there. It's doable, and there is a way to make money. And Facebook is the kind of stock you could do that on because the spreads are really narrow. So you could buy a handful of option contracts, and on something like this where the moves aren't expected to be that big, you could maybe go in, buy more contracts with weekly options. It's a day trade. You don't need to hang on to these beyond this week or beyond today. So no need to buy more time than Friday. And you've got that real tight spread so that when you buy and then sell, you can come out and make a profit, even on some of these small little moves. Let's see. Mike is asking, is there a chance that you would have been out over here on a rally above the 10? And Ken also asks the same question. So this comes down to, have you changed your stop in a way that it, initially it was the 20 moving average that was resistance, so that was the stop. Now, would you have adjusted it on the way down to stop out at the 10? Let me do this. Let me erase the drawings. Let's back this up. All right, hey, Victor, saying that second retracement was good for $460 day trade profit. At the 20 moving average stop on calls, wide open up to large volumes. So you're switching over to calls? Are you talking just that first bounce? I'm trying to figure out what you're talking. Yeah, I think you're talking just that upswing, right? Is that something you guys did in the lab? Okay, so not this one, but the second retrace. You're talking the retracement part, right? Is that correct? Cool. Awesome. So yeah, Victor's pointing out here, over here on that retracement, if you traded the call side of that, that's $460 day trade right there. Just catching, upswings like that and retracements. And that's the idea with stocks like this. The spreads are so narrow. There's so much opportunity because of the narrow spreads, right? So it is definitely doable. Now let me back it up, because let's say you're on the put side. Let's say you move in over here. On the put side over here, stock comes up to the 20 moving average, it starts to sell off. So we're looking more bearish here. We go forward, it drops lower, still in the trade, big volume picking up. Now, do you notice what started to happen here? There's an important thing about where the candle body is, and this is I guess the lesson I wanted to show you with Facebook, is that when this stock starts trading with this kind of momentum, big volume, and it's all outside of the lower band. Now, you have two choices. Stay in the trade with your 20 moving average as the stop, or if you wanted to tighten your stop down, where would you put it at this point? Would you move it in? Let's see if I can do this. Nope, all right. Would you move it into the down to the 20? Or I'm sorry, you're at the 20. Would you move it down to the 10 moving average? I like it. Teresa's saying at the Bollinger Band. Diane's even bringing up the 5. Okay. Yep, Bill, at the band or just above the last candle bottom. I like that. So here's the deal. You guys are seeing this. What's happening is the move is so fast. It's so much. If you are a day trader and you want to move your stops down, I am totally fine with that. But rather than the 10 moving average as a stop, the problem with using that as a stop is honestly what happened over here. In the morning, it popped up above the 10 and then immediately dropped. So here's the thing. You don't want to stop out right before that stock continues lower. So if you're going to tighten your stop, I'll give you two choices. You either go with the 20 moving average and don't tighten your stop, or if you're going to tighten it, start using something like maybe a 5 moving average or this lower band, because the candle bodies are starting to move entirely outside of the lower band. The other thing, what is volume? Oh, by the way, let me finish that thought. When as candles are trading entirely outside of the bands, that doesn't continue for long. So that's what's important. It's not that it's just moving outside the band, but also that doesn't happen for very long. So when you have that moving completely outside of the lower band, that is something we need to pay attention to. And that huge volume spike, what could that become? That could become a little bit of a blow-off move, couldn't it? Yeah, and so what we could do is start using either the close of this candle or that lower band. I mean, somewhere in there where you've got a really tight stop. Now here, the rally up above that lower band, that could be your exit. And so you've taken almost $1 movement, not quite $1, but let's say you entered somewhere here, 118.90 to maybe 118.80. And over here, when it's rallying back above that lower band, you were getting out at 118. I mean, so now you're talking, let's say 80-cent move, even 10 contracts, you could make $500, $500, $600, $700 off of that move really reasonably. So, and that's Robert saying, could this be a blow-off move or short covering? It could be, but what it shows you is just a change. And so you've got big volume, which is weird. You start seeing 2 long wicks at the bottom here, which is also kind of weird. And it looks like the stock is going to retrace. And sure enough, took it a little bit, but right here, big, big, big retracement. And sometimes this is the way your trading is going to work. You're going to get in over here, you catch this downswing out on that, and then just wait for a little bit. Stock comes back up. Now we've had a good, healthy retracement. Now we can look at another entry. And our entry then would be right here when the stock broke down below the 10. So if you wanted to trade it again, this is the other entry. Now the other thing that I want to make sure you guys understand, the first part of the move is almost always going to be the bigger, more profitable trade. So this part is going to be more profitable than this part of the trade that just started. Let's see, a couple questions here. Oh, Scott was asking, yeah, back in the day when I was a new trader, I got all frustrated, and I did. I mean, anybody who's traded, we're going to get frustrated, and you're going to want to throw in the towel, probably multiple times. It's just the way it happens. And yeah, I mean, so Scott said, what did I do if I almost gave up, what did I do to reignite my passion for trading? I mean, it comes down to just looking at the markets and the potential out there. You guys know the potential is there. You see it, and that's what keeps me interested in the market. And yeah, Scott said, yeah, I get burnt out sometimes. I do too. I think we all do. I mean, take vacations, take time away from the market. You don't have to stare at it all the time, but do it. Find a way that it fits into your life rather than taking over your life and becoming a drudgery and feeling like a job, right? It's going to a certain extent, it is a job, and you have to work on it. And there's no doubt about it, especially when you're going through the learning curve. But once you get some of the basics down and you're understanding charting and you've gone through the initial part of the heavy learning, then you can get to the point you can say, look, I love day trading, and I'm going to day trade a few hours in the morning and then be done. Or I don't want to day trade. I like to be able to do what I want during the day, so I'm going to look at charts at night. I'm going to spend half hour to an hour at night researching, and then I'm going to set contingent orders and focus on during the day doing other things, whether it's a job or family or golfing, whatever it is you like. Do that during the day, and then at night you go home again to see what alerts or what orders were filled, adjust your stops, run through scans, see if there's a new trading idea, and then put in your orders, contingent type orders for the next day. So a lot of it is really figuring out, I guess, understanding that there's always potential with the market. The market has, in my opinion, better opportunities than anything else. You can buy and sell stocks and options at any time. You can in real estate. I mean, you can do things in the market that you can't in real estate. You can do things in the market that you can't if you own your own business. So just the opportunity to be able to buy and sell at any time and having these liquid, fluid markets, to me, that's what keeps me interested. So I think there's no other, I just don't think there's anything better, but I think you've got to find a way that it fits into your life, right? Whatever that is. So kind of figure out how you want that to fit in, because the markets can work for you on any level. You just have to decide where you're coming from and then fit that in, right? All right. Let's see, Tom. Lengthen and shrink time on a chart. Just click on Tradestation. You just click the up and down arrows. So up arrow zooms in, down arrow zooms out. Now there's one thing that is weird that I couldn't figure out the other day. Once you back the chart up, so let's say I back it up right here. To zoom in and zoom out, what it does, this is weird. I don't love this, but what it does is it basically kind of grounds the chart right there. Wherever you back it up to, then it'll zoom in and zoom out from that. Now maybe there's a point to that, but I've never seen a charting service do this, so I don't know why it does it. But you'll notice now when I click my up and down arrows, that same candle on the left it's always that candle on the left. So as I zoom in and out, rather than in the area focused on, it's that candle on the left. Once you go current, then I zoom in and out, it goes to the right side. It kind of focuses on the right side of your chart. It's an odd little thing. It's a feature. I'm sure there's some reason for that. All right. Yeah, and Tradestation does have contingent orders, which is honestly the switch. There are some things, just functionality, that we're going to have to get used to with Tradestation, but what it does that eSignal just never could do for us is just it's got killer orders. The orders are better than anything out there, and the fills are great. I mean, just, there you go. So yeah, back to, Bill's saying, back to, the idea of the market, you don't have to deal with employees. It's true. I'll tell you what, the real estate market as well. I mean, I don't know what your markets are like, but they are just insane here. For about, we're going on probably 4 years now. You can't buy a home. I mean, people put their homes up, and it's multiple offers above asking. In fact, we have a friend that is a real estate agent, and he was just saying the other day, I think that somebody put a home up for like $1,050,000 or something, and they put in an offer for $1,300,000, and the offer that ended up getting accepted was $1,500,000. So, and it's been like this for years and years and years. You can't just go in and buy what you think you want to buy. My friend was telling us that the real estate, the buyers agents are just dying out there because they're putting in, 10 orders and they're getting nothing. They're getting filled on one, so the stock market is not like that. You don't have to deal with those games. And if you want to sell your stock or your option, you could sell it within seconds. There's none of this playing that game and hoping you could sell, or, there are clear advantages in the stock market, and that's what keeps me going, for sure. All right, let me see if I missed some questions since I've been chatting. Dysfunction is okay, right? It's like having with Tradestation, it's like having a dysfunctional family member. We all have them. Yeah, we just deal with it, right? Okay. Yeah, so just know, when you're zooming in, stay to the right. And if not, I mean, let's say I want to teach you about this little, what's the other thing? Maybe it would come in handy here. Oh, who knows? Maybe I wanted to focus on the breakdown yesterday and that little mini squeeze play. Right, so now I can zoom in and it shows me the squeeze play. It's just going to be us getting used to that, the fact that once you back the chart up when you're zooming in, it's going to lock it here on the left. I could not figure that out for a while. It took me an evening. All right, let me see here. Let's see, Christine's asking, when you have a Bollinger Band pinch, but the stock started to move 2 to 3 days before the pinch, does the 3 to 5 day count reset? Yeah, so you're saying more if you have kind of you have the pinch, so it runs up or down into the pinch, and then, then it consolidates. It does reset the day count, yes. Let's see here. Pamela, I'm not sure yet. Do you guys know, does Tradestation send alerts to cell phones? I'm still learning it. This is my goal. I've got a ton of studying to do on this week. Oh, Jed knows. Oh, there you go. So yeah, it does. Yep, thanks, Jed. So you can do it. Jed knows. He's helping me. So it's through email gateway instead. So just use the email address for your cell phone. Yeah. There you go. So yeah, that will work. So that's awesome. Can you use Options Express? Sure you can. I mean, you could use any broker you want to use, right? Options Express is more of a web-based platform. I believe they still are, but I'm not sure. I used to use them years ago. It just depends on what you want. If you want, a mobile platform, really good orders, I think Tradestation is consistently rated the best in the industry. But that said, maybe you don't want all the bells and whistles. Look into it. Check out Options Express versus Tradestation. You guys pick what you want. This is the one we're going to use. I think as far as orderability, this is honestly probably the first one I can say, look, I'm going to really like this for all levels of trading. It's pretty cool. So I love it, but if you want to go with another broker, I certainly wouldn't hold it against you. Find something you're comfortable with, find something you like. This is a great place to go if you don't want to spend all the time looking into all the different brokers out there. Just know Tradestation has got a great platform. They've got really good order ability and then really good fills on your orders. So you could do that, or if you like something else, go ahead. It's totally up to you. To me, it's all about the chart, right? Having a good order execution is huge, but also you've got to be able to see the chart. You can see the charts here. Wherever you can see them the best, go with that. Joseph. Oh, you know what? Does Sylvia know that you're looking for that partner price in Orlando? I do want to offer something, a discounted price if you're bringing a partner or spouse, significant other. Let me reach out to, let me see what I could do. Let me reach out to the numbers guy, the guy that does all this stuff, and let me get that for you. And by the way, it's been a delay in getting the event set for the event where Jane and I are teaching. It's going to be the first week in August, likely the Thursday, Friday on the 4th and 5th. We are finally just now hearing back from the hotels, and I am sorry for the delay. It just got, I don't know what's going on in Orlando, but it took a while to get this, but we've got now some hotels, and we're going to get everything finalized and set, and we should be within, probably by tomorrow, we'll have everything set in the dates, but it's likely going to be August 4 and 5. Okay, and I'll get a partner price for you too. We'll figure out something. All right. Let's see. Yes, and Pamela's asking about the intraday. You know, I haven't done one of those for a long time. And here's the deal. I put one on the schedule a while back, and nobody signed up. So as much as I would love to do an intraday with Marquette, you guys have to hang out with me. So if you want, I could do one, but it'll be in July. I'm swamped the rest of the month. But I could do it in July, but just, you know, if you don't sign up, I'm not going to teach it. Because if that's the case, I'll just hang out by myself. Anyway, like I do all the time, right? Okay. There we go. All right, catching up to the text chat. Yes, Scott said, true that. I learned after marketing and selling my home back in 2013. Stock market is more liquid than any other business, right? That's the thing. It's just the liquidity. You don't have the hassles. You don't have the expenses of the, inventory that goes bad or doesn't sell, and you have to mark it down, and the employees and the insurance and the health. I mean, it just goes on and on. It's just you and the stock market. So don't miss the opportunity. That's what should keep you motivated right there. Tom, yeah, does Tradestation offer tutors for dummies like me? You're not a dummy. But they have all sorts of online stuff, lots of YouTube videos teaching how to use Tradestation. They've got, class after class online. Hang on a second, Jen has some thoughts. So on their website, Jen's saying they've got a whole week-long course on there as well. So go dig around there. We will also show you little tips and tricks for sure as we're moving forward. If you have questions, call our tech support team, grab Bill or I, especially Bill. He's ahead of me in the learning curve. I hate to admit it. In Tradestation, but I will get there. But yeah, grab us. You can ask us questions. Again, our tech support people. And at some point, I believe we're going to have a dedicated Tradestation person over there as well to help you guys. So that, I don't think we have that yet, but that's something that they have offered to help us with. So all sorts of help out there. And just, honestly, start with their website and start picking up little pieces. Just if you have, 10, 15 minutes, watch a little part of the class. I'm looking for kind of a fast, just quick, fast, give me just the most pertinent things that I need to know. And if I find that out there, I will send it your way. Okay, so, and then like I said, we could just teach you here in these classes as well and help you out. And then as far as the pages we're looking at, we've got all these so that you could just take them and download them. So that should be set for you guys. All right, let's look at Tesla. Spell it right, TSLA. There we go. Yeah, Pamela's talking about Tesla, looking like maybe it's ready to go. So you've got, do the others zoom out? Tesla had already had a huge breakout today. And the thing that I love about this, as I was scanning and going through things last night and yesterday, and you guys saw Priceline breakout yesterday, right? Huge momentum push. It was crazy. And so big momentum push yesterday on Priceline, but I'm thinking, okay, so it already moved yesterday. What could we trade today that hasn't already moved? And you know what I loved was Tesla. And I love Tesla because of this. I loved their setup. If you look at the daily chart here, I loved this setup yesterday. It had traded as a bullish engulfing candle, long wick at the bottom, right up to the 20 moving average. This was an awesome setup for a trade today. And obviously it doesn't guarantee the stock is going to do what it did, but check this out. So that breakout move this morning, gap up, first 5-minute candle, let that kind of do its thing. On the next candle, when that pushed higher, that was an entry right above 222 bucks. It's traded up $10 from that level. So is it pushing higher again? Yeah, this is another Bollinger Band breakout for sure. But wow, if you would have been set, I mean, I talked about this in the Market Insight last night. If you would have been watching this, ready to go for today, you really could have caught this morning, caught that entire run. Now, the question is this a breakout that's going to hold, or is it going to pull back? These, and you know, I mean, if you trade it, great, use a tight stop. These get a little bit more difficult to trade because it's already made such a big move, and it's 3 candles beyond the bounce off the 10 moving average. So you got to fight that a little bit. It is a Bollinger Band breakout, which is great, but it's also been up 3 candles in a row. So sometimes these will end up pulling back, and they'll give us a better entry on a bounce off the moving average. So that's something to think about. Let's see here. Can you trade Forex on Tradestation? Yes, you can. Bill, you're liking the dry heat in Vegas. I love that. Mike, give me until just this afternoon until tomorrow morning. I'm pretty sure August 4 and 5 will be the dates for sure in Orlando for the event with Jane and I. Just give me tonight just to make sure we can confirm that in the right hotel. So I've just got several emails from people from different hotels, and we're not going to be at the Gaylord Palms likely. We tried to have an event there. They told us they could give us space, and that's been the hang-up. They just cannot give us the space. So we're going to find another hotel, but it'll be somewhere in that area. We've got some nice hotels that have sent us their availability that I think we'll be able to check out here. Okay, let's see here. Yeah, so Jose is asking, do you scale out, especially if you have weekly options, or do you hold on to the whole position? I'm a fan of scaling out. You know, if you've got a big movement and it's something that's a lot bigger than what you usually see, I think it's a great idea to scale out a little bit, take some partial profits along the way. So I'm always a fan of that. Once the technicals show you things may be slowing down, why not scale out a bit? Don't do it until the technicals tell you to, right? But that's a good way to spread your risk out and to bring some money back to cash so that you're getting to the point that you're kind of break even on your trade, where it's nice when you're playing on the house's money, right, and not your own. Oh, awesome. Peg says we could do the event in her house. I love it. All right, Peg, we'll be there. Okay, so yeah, back to, I love that. You are coming, right? Well, especially if it's at your house, I guess you'll be there. So I event again, I'll get that finalized for you. Here's what I know for sure. Next week I'm in Chicago. Bill and I are there. We've got a couple people that are still thinking about it and that have called us, and I will just tell you, if you guys are thinking about it at all, it's a really great group of people coming. I mean, except for, well, you know, Scott's going to be there, but it's a really, I love Scott. All right, it's going to be a really great group of people. Seriously, everybody, Scott included. I'm looking forward to it. Well, it'll be 5 days at the CBOE, really just practicing just the timing and the entries and the exits and applying all this stuff, putting it all together to help you, come out with what, just some things that can help you in your trading and get you to that next level and help improve your entries and exits. The feedback has been great from people that have been and spent, a full week just practicing this. Nothing but the markets, no distractions from home, just focus on the markets. There's a lot that you can learn there. When you come in, and Michelle, you know what, if you have questions, if you want to talk to somebody about it, give me your number here. I can call you, Bill can call you, Sylvia can call you. If you're a first-time attendee, when you go, you get a quarter of the My Traders Talk and a quarter of Bill's Lab included in the class. So it's at the point when you come, we want you to just to be there just for you and to focus on learning, and then have all the tools that you need as you leave class to get you going on the right track. All right, so we got that next week. I'll be there in Chicago, so you won't hear from Bill or I next Tuesday. So come hang out with us live. Scott, your buddy. And then the next event that I am scheduled to teach will be this event with Jane and I. Like I said, most likely August 4 or 5. And I'll keep you posted on that. Hopefully we'll have that finalized and on the website with final dates and with a hotel for you tomorrow. Okay, so I'll work on that. All right, you guys, thank you so much for hanging out with Bill and I. I appreciate it. And I will look forward to seeing many of you next week in Chicago. All right, thanks, guys. Take care. Have a great day. Have a great trading day, I should say.